Welcome to XRP Pro Ledger. Today, we need to address something directly before we get into the data because two narratives are competing for your attention right now, and the gap between them represents one of the most significant mispricings in the XRP market this year. On the surface, the picture looks uncomfortable. The US-Iran ceasefire deadline expired today with no official extension. The Clarity Act has slipped into a procedural delay that pushed its timeline into May, and Polymarket odds for passage in 2026 collapsed from 82% to 50% in a matter of hours. Retail sentiment is cautious. XRP is consolidating between $1.42 and $1.46. And analysts at StoneX are flagging $1.40 as a short-term cooling target if the $1.53 resistance fails to break today. That is the surface narrative. The institutional narrative is something entirely different. 2 hours ago, on-chain data tracked an 85 million XRP transfer from a top-tier exchange to an unknown cold wallet. A transfer of that scale represents a deliberate, irreversible removal of supply from the liquid market by an entity operating with conviction that the current price is not the price they intend to sell at. Stay with this analysis through to the end, because I am going to walk through Ripple's quantum-ready roadmap in precise technical detail, and the institutional security implications of that roadmap are the reason the entities moving 85 million XRP into cold storage are not losing sleep over Polymarket odds or ceasefire headlines. Let us establish the precise market structure before we move into the contrasting narratives, because understanding where XRP sits technically provides the framework for interpreting everything else that follows. XRP is consolidating in the $1.42 to $1.46 range, with 24-hour volume exceeding $1.10 billion, a volume figure that is significant because it is generating meaningful transactional activity in the market during a session characterized by maximum geopolitical and legislative uncertainty. The $1.53 level is the resistance that technical analysts, including the StoneX desk, are watching as the near-term directional signal. A confirmed break and hold above $1.53 opens the path toward the $1.70 to $1.90 range. That is exactly what the bullish MACD crossover has been pointing toward. A failure to hold $1.53 by the end of the session creates the conditions for a short-term cooling toward $1.40, a level that, based on the supply compression data we will cover, represents a structural floor rather than a breakdown risk. The neck-and-neck battle with BNB for the number 3 spot, excluding stablecoins, is a ranking dynamic with specific institutional implications. Most retail-focused commentary is not addressing this precisely enough. I will return to that ranking threshold later in this analysis, because it directly determines which institutional mandates XRP qualifies for and which ones it does not. The Clarity Act's Polymarket odds collapsing from 82% to 50% in a matter of hours is a major legislative development. It is generating the most retail anxiety in today's session, and it deserves a precise and honest assessment rather than either dismissal or amplification. The procedural delay that pushed the Senate markup timeline into May is a real legislative setback, not catastrophic, but real. The 50% odds on Polymarket reflect genuine uncertainty. Uncertainty about whether the Senate Banking Committee can navigate the banking lobby pressure, the stablecoin yield disputes, and the competing legislative priorities, all within a compressed calendar window before the midterm cycle creates additional political complexity. For the broad altcoin market that depends on Clarity Act passage for its regulatory survival, a delay from late April to May is meaningful. For XRP specifically, the analytical framework is different and more precise. XRP's regulatory status as a digital commodity was established by the courts, not by the Clarity Act and not by any pending legislation. The Clarity Act passing would add legislative confirmation to judicial confirmation that already exists. The Clarity Act failing or being further delayed would not reverse the judicial confirmation. The 50% Polymarket odds are a real signal for assets whose regulatory survival depends on legislative action. They are a less relevant signal for the asset whose regulatory status is already the most clearly established of any major digital asset in the United States. Now, I want to isolate the 85 million XRP cold wallet transfer that landed in the on-chain data 2 hours ago, because this single transaction contains more analytical signal than the entire Polymarket odds movement combined. Extracting that signal requires understanding what a transfer of that specific size and structure actually communicates about the entity executing it. An 85 million XRP transfer from a top-tier exchange to an unknown cold wallet is not a retail investor moving funds for security reasons. At current prices in the $1.42 to $1.46 range, 85 million XRP represents approximately $120 million to $124 million in dollar-denominated value. Entities operating at that capital scale have treasury management frameworks. They have compliance requirements and investment committee oversight that govern every transaction of this magnitude. The decision to move 85 million XRP from an exchange where it is immediately available for liquidation to a cold wallet where access requires a deliberate and time-consuming process to reverse. That is an operational signal. It means the entity executing the transfer does not anticipate needing to sell this position in the near term. It is the cold storage equivalent of an institutional investor moving equities from a margin account to a long-term custody structure. The geopolitical uncertainty that is generating retail anxiety today did not prevent this transfer. The Polymarket odds collapse did not prevent this transfer. The $1.53 resistance failure risk did not prevent this transfer. The institutional conviction that drove this transfer is operating on a different analytical time frame than the retail fear responding to today's headlines. The ETF inflow data provides the second institutional signal. It contextualizes the cold wallet transfer within a broader pattern of accumulation that is operating across multiple channels simultaneously. Over $65 million in April inflows have been recorded across US spot XRP ETF products, bringing cumulative holdings to approximately 769 million XRP, with assets under management between $1.27 billion and $1.50 billion and $1.50 billion, and two firms whose investment processes involve research teams, compliance reviews, and investment committee approvals. This creates significant structural barriers between a market development and a fund-level capital deployment decision. When Bitwise and Franklin Templeton are leading weekly inflow data during a session characterized by geopolitical deadline expiration and legislative odds collapse, they are not reacting to today's headlines. They are executing allocation frameworks constructed weeks or months ago, based on a fundamental thesis that today's surface-level noise does not alter the 769 million XRP locked in ETF custody is supply that has been permanently removed from the liquid market for the duration of those institutional positions. Combined with the 85 million in the cold wallet transfer and the broader whale accumulation pattern, the supply compression dynamic is operating at a scale that the current price does not reflect, and the retail sellers responding to Polymarket odds are actively contributing to it. They are adding their positions to the institutional accumulation queue at heavily discounted prices. The US-Iran ceasefire deadline expiring with no official extension is the geopolitical variable. It is creating the macro risk overlay, suppressing the entire risk asset complex today. Understanding its specific interaction with XRP's price dynamics requires separating the short-term sentiment impact from the medium-term structural implications. The acute phase of geopolitical stress creates an institutional risk management response, a response that is applied uniformly across risk asset categories. Crypto, equities, emerging markets, and growth-sensitive positions all receive incremental caution simultaneously when military escalation risk increases. This is not a fundamental reassessment of any individual asset's thesis, it is a portfolio-level risk management adjustment. It reduces position sizes across the board until the geopolitical variable resolves. The price compression XRP is experiencing in the $1.42 to $1.46 range today is partially a function of that institutional caution overlay, caution that lifts when the ceasefire situation resolves in either direction, because the resolution of uncertainty, even toward a negative outcome, reduces the risk premium that markets are pricing into all risk assets simultaneously. The entities moving 85 million XRP into cold storage today are operating with a specific analytical insight. The geopolitical caution overlay is temporary, while the supply compression it enables is permanent. They are using the temporary price suppression to execute permanent supply removal at prices that the market will not offer once the geopolitical overlay lifts. The quantum-ready roadmap is the development that I want to address with the precision it deserves. Because most of the commentary around Ripple's post-quantum security announcement has focused on the headline rather than on the specific technical and institutional implications of what Phase 2 live testing actually represents. Ripple's four-phase roadmap to make the XRP ledger quantum resistant by 2028 is structured as follows. Phase 1 involved the research and algorithm selection process, culminating in the decision to implement NIST-recommended quantum-safe cryptographic algorithms. The exact same standards that U.S. government agencies and federally regulated financial institutions are required to use for their own cryptographic security. Phase 2, which is already live in the first half of 2026, involves active testing of those NIST-recommended algorithms, testing on the XRP ledger, alongside vulnerability assessment work conducted in collaboration with Project 11. Phase 3, scheduled for the second half of 2026, moves to DevNet testing, with parallel operation of both existing and new cryptographic standards simultaneously. The technical architecture that allows the transition to be validated without disrupting current network operations. The 2028 full transition includes emergency migration tools and a Q-Day emergency protocol that provides a structured response pathway. In the event that quantum computing hardware reaches cryptographically relevant capability ahead of the projected timeline, no other major blockchain has a publicly committed, phased, NIST algorithm-based post-quantum implementation roadmap. A roadmap with a firm 2028 deadline and an emergency protocol already designed. Bitcoin does not. Ethereum does not. The institutional technology evaluation implications of Ripple's quantum roadmap are where most retail-focused analysis ends, and where the most important institutional decision-making actually begins. When an institutional technology team evaluates a blockchain network for a decade-long infrastructure commitment, post-quantum cryptographic security is not a future consideration. It is a present-tense evaluation criterion. The reason it is a present-tense criterion is straightforward. Institutions building infrastructure that will be operational in 2030, 2033, and 2035 need to know now that the cryptographic foundations of that infrastructure will remain secure throughout the entire deployment window. The timeline for quantum computing hardware reaching the threshold at which it can break elliptic curve cryptography, the cryptographic standard securing Bitcoin, Ethereum, and most other blockchain networks. That timeline is being actively compressed by hardware development progress that institutional research teams are tracking with absolute precision. Project 11's involvement in Ripple's Phase 2 testing is specifically significant, because Project 11 is the organization with the most rigorous independent measurement of where quantum hardware currently sits relative to the cryptographic threshold. Their collaboration with Ripple means that the quantum-ready roadmap is calibrated against the most accurate available data on the actual Q-Day timeline, not against theoretical academic estimates. The XRPL's native key rotation feature, which allows users to upgrade to quantum-resistant keys without changing their wallet addresses, that is the specific institutional-grade accommodation that makes the transition operationally feasible at scale without disrupting existing institutional custody arrangements. The ranking dynamic between XRP and BNB for the number 3 position excluding stablecoins deserves a precise analysis, because the specific market cap threshold that separates number 3 from number 4 has direct consequences for institutional mandate eligibility, consequences that are not widely understood in retail market commentary. Institutional investment policies at major asset managers, pension funds, and endowments typically specify minimum market cap thresholds for digital asset allocations, thresholds that exist because below a certain market cap, an asset's order book depth is insufficient for institutional scale position building without generating adverse price impact. The number 3 ranking places XRP above the minimum market cap threshold in virtually every institutional investment policy that includes any form of digital asset allocation criteria. Number 4 does not. The practical implication is that every basis point of market cap advantage that XRP maintains over BNB in this neck-and-neck competition represents the difference. The difference between being technically eligible for inclusion in institutional mandates and being technically excluded from them. The institutional capital that is currently flowing through the ETF channel, with Bitwise and Franklin Templeton leading, is in part driven by this specific mandate eligibility dynamic. Holding number 3 is not a vanity metric for XRP. It is an operational requirement for continued institutional capital inflow at the current scale. And the entities accumulating 85 million XRP into cold storage today are operating with the specific awareness that the ranking dynamic favors their thesis at the current price level. The convergence of all the data points assembled in today's analysis produces a structural picture that the current price level does not reflect. Stating that conclusion precisely requires returning to the specific contrast that opened this analysis. Retail sentiment today is responding to a polymarket odds collapse from 82% to 50%, a ceasefire deadline expiration with no extension, and a $1.53 resistance failure risk. Each of those factors is real. None of them alter the fundamental institutional thesis, the thesis that is driving the 85 million XRP cold wallet transfer, the $65 million April ETF inflows led by Bitwise and Franklin Templeton, the 769 million XRP locked in institutional custody, and the Phase 2 quantum roadmap active testing that positions XRPL ahead of every competing blockchain on the most critical long-term security evaluation criterion that institutional technology teams are applying. The price at $1.42 to $1.46 is the price that exists when retail sentiment is responding to surface-level geopolitical and legislative uncertainty. The price that exists when those temporary overlays lift, when the ceasefire situation resolves, when the Clarity Act markup date arrives in May, when the institutional accumulation that is happening today becomes visible in the supply compression data. That is a price that the current level does not reflect. The 85 million XRP that moved into cold storage 2 hours ago will not be available to sell at the price retail investors are currently offering it at. The 769 million in ETF custody will not be released into the market because polymarket odds moved. The entities positioned correctly are not reacting to today's headlines. They are reading today's on-chain data. If this analysis changed how you're thinking about XRP, hit like and subscribe. I drop deep dive breakdowns like this twice a day to keep you ahead of the market.